right, so this is where we left off from yesterday. So what we're going to be doing today is reviewing chapter 7, 8, and 9. So chapter 7 and 8 were all about understanding perpetual inventory. Okay, so let's go ahead and go over this real quick. Okay, so here we are, chapter 7. Question asks that your tracking method is perpetual. On June 1st, you made a purchase of 100 coffee mugs for $2.35 each, and freight was $100. Okay, you purchased this on an account. Record this transaction. So first off, what are we going to journalize, or how are we going to journalize this?
We put the inventory and freight costs together. Everything is inventory.
Perfect. So in this case, what is our specific inventory item?
Mugs.
Yes, coffee mugs. All right. And what? How did I pay for it? Yes, accounts payable. And yes, good note here that with perpetual inventory, everything goes into inventory. So in this case, what is my total amount that is going to go into inventory?
335.
335. So that's 235 because it's 100 times $2.35 plus the freight of $100 get to give you a grand total of 335. Okay. You can make a note here if you'd like for practices, but again, this is all I want you to know when you journalize is, can you recognize that I want inventory and I want accounts payable, and that the inventory is for the full amount, including the freight. Okay. Number 27, okay, on June 7th, you received your coffee mugs and found 2 of them were broken, or sorry, were cracked, all right, and you requested a full refund from your vendor. Record this transaction.
Accounts payable debit
Yes.
and coffee mugs credit.
Yes, accounts payable debit and coffee mugs are credit. So from here, how much, so this is a continuation. So how much is each of my coffee mugs?
$2.35.
$2.35. So if I found 2 of them that are cracked and I requested a refund on that, how much am I actually getting back?
$4.70.
You're getting $4.70 each. All right. And your inventory is already updated. Okay. Now, question number 28. Okay, on June 8th, you sold 25 coffee mugs for $10 each, and it cost you $3.37 each. Okay, so assume there's no sales tax. So, and all sales were made with cash. So, how am I going to journalize this? So, this is June 8th. We're going to debit cash. Good. What else? What are we going to credit? Sales. Good. And in this case, there is no sales tax. I mentioned it right here. Assume there are no sales tax. So no sales tax. All right. How much cash am I getting?
33.70.
33.70. How did you get 33.70?
No. It is cost of goods sold. So
No, good.
250.
Yes, 250. Good. Right? This is the selling price. This is what we want to sell the cups for. Now, how much did it cost me to sell that item? $3.37. Okay, so in this case, what's my account going to be? Cost of goods sold. And what's my credit going to be?
84.25.
425.
84. 84.25. All right. What's my credit account going to be? Where am I taking this amount out from?
Inventory.
Inventory.
Yes, you're taking directly out of inventory, which is the coffee mugs. Okay. So good. So when you journalize this, I'm going to ask you, are you going to A, debit cash? And are you going to B, credit sales? And are you going to A, debit cost of goods sold? So make sure you read carefully, okay? Especially with the numbers because like the previous exam, I put something in there and you guys selected that it was both of those answers when it really wasn't. Okay? All right. All right, number 29. Okay, on June 10th, a customer returns 2 of the coffee mugs for a full refund, and you sold each coffee mug for $10 each, and it cost you $3.37 each. Record this transaction.
Sales returns debit.
Good. Sales returns and allowances because it's a contra account. It's this account you can never undo. You have to create a contra account for it. So sales returns and allowances. Good. What's my credit going to be? Cash.
Yes.
Yes, we got to give them back the cash. All right. Now, how much am I going to actually give it back?
20.
$20. That's correct. Excuse me. All right. What else do I need to include?
Caps and cost of goods sold.
Yes, that's correct because in this case we're giving them a full refund. We're not letting them keep it. They're going to return the product back to us. So in this case we need to reverse our transaction here. We need to add back our cups back into inventory and we need to reverse our cost of goods sold. All right, and how much is that going to be?
674.
674. All right, good. So make sure that you know that because chapter 7 was all about making the purchases, making the sales, and then making the purchase returns, and also making the sales returns. Good. So here we're diving into chapter 8. So use the following information. Okay. With the table to answer the next 2 questions. So here, the most important thing that you need to know is that your tracking and costing methods are perpetual LIFO. Okay. So let's go ahead and take a look. So what happened on June 1st? At $1 each with a freight of 25. So here we are, June 1st. We made a purchase of 100 toys at $1 each with a freight of 25. So what is going to be my purchase expense?
100.
100.
Right? And what's my total cost?
125.
And what is my cost per unit?
$1.25.
$1.25. Okay. Good. Since I don't have my full table with me, that's okay. You guys can imagine the last 3 columns on the left side, on the right side. Okay. So then what happened on June 10?
You purchased another 200 toys at 125 each with a freight cost of 50.
Okay. So on June 10, we purchased another 200 items at 125 with a freight cost of 50. So what's my total purchase price?
250,
And my total cost?
300,
And my cost per item. What is my cost per item? $1.50. Okay. So here, then what happened next on June 12th?
we sold 200 toys at $5 each, no sales tax.
Okay, so we sold 200 items. Okay, and what tracking method are we using?
Perpetual LIFO.
We're doing LIFO. So last in is the first to go. If we sold 200 items, all right, on June 12th, which batch am I going to be taking out from?
610,
610. So in this case, am I taking the whole batch or just a part of the batch?
the whole thing.
You're taking the whole thing. So in this case, we know it's $1.50 and we know it's going to cost me $300. So in this case, we can eliminate this batch right here. However you want to eliminate it is however you want to do it. Okay, so in this case, I'll go ahead and I'll cross it out. Why isn't my... Nope. Up this one. There. Okay, thank you. Yeah, I was trying to do that thing. All right, anyways, good. Thank you. All right, next is what happened next. So on June 15, what happened next? Okay, so on June 15, we purchased another 300 units at $1.50, and the freight cost me $75. So what is my total purchase price here?
450,
$450, and plus 75 gives you
525,
$5.25, and this is $1.
75,
Good, $1.75. Good. So then, what has happened next on June 20th?
sold 250 toys at $5 each.
Yes, we sold another 250 toys. So in this case, June 20th, if I sold 250 toys, which batch am I going to be taking out from?
615,
The 615. So each one cost me $1.75. Now, of course, I'm not taking the whole batch, so I need to calculate the cost per item. So what is 250 times 175?
437.50,
437.50. All right. In this case, I'm going to go ahead and subtract my 250, leaving me 50 left. Okay. And if I'm subtracting 437.50, oh, let me put that negative in there. I should have how much remaining?
87.50,
87.50. And of course, if you recalculate it, it should still be $1.75. All right, and then with this, I'm gonna eliminate this batch here. Okay, so now that I have my new batch of 50 and my 100 batch left, it says that I should have at the end of June 30th that I should have a total of 150 units left. And that's true. So at the very bottom, I'm going to total up my values. So total. So how many items did I sell?
450,
450 at what total cost? $737.50. Okay, how much do I have left on inventory on hand?
150,
150 at how much in total is my remaining of 150? 212.50. And lastly, yeah, you don't need to fill that column out. So here you go. By doing this, it's so much easier to answer the rest of the questions, right? So here it says, what is the total cost of your ending inventory?
212.50.
B, 212.50. All right, and then the next question is going to be asking you is what is your total cost of goods sold? In this case, we solved
737.50.
737.50 right here, D. All right. So in this case, that's how you can solve it this way. You can always add up your totals and figure it out that way as well. But in this case, because we have our columns already aligned, you just follow them through. That's pretty much it. Okay, so now that we answered that, so same scenario of except I'm going to be testing you on the tracking method and costing method to be perpetual moving average. So in this case, I cannot copy and paste because my values are going to look different. So in this case, let's go ahead and go over this. So what happened on June 1st again? We purchased 100 units at $1 each with a freight of 25. So as we know here, my quantity is going to be 100 at $1, making that 100 plus 25 gives you 125, gives you $1.25 because that's our only batch that we have. Okay. So then what happened next?
You purchase another 200 toys at $1.25. Freight cost of 50.
Okay, so again, June 10, we purchased another 200 units at $1.25, which made this 250 plus 50, which gave us a total of 300. Now, what do we have to do here because it's moving average? What do we have to do here because it's moving average? Can we solve our cost per item right now?
We have to make average for 300.
Exactly. So we're going to add up our total. So I got 300 here. What's 125 plus 300? 425. All right. So now what is my average cost per item?
$1.41666.
All right. So 1.416667. Okay. Good. So now we're only focused on this one right here. So then what happened on June 12th?
We sold 200 toys.
We sold 200 toys. So in this case, right, June 12th, I sold 200 toys at what price? At what cost?
1.416667.
Yeah, so I can't fit all my sixes here, but what is going to be my total cost here? Make sure you round to the nearest penny.
At 283.33. 283.333.
28333. Does everyone else agree? Yes?
Yeah.
Okay, good. So now that is going to be 288.83.33, we're going to subtract that out, so 200. So I should be left with 100. And then again, minus the 28333, I should be left with 1 for,
167.
okay. And again, that should be 14167. Okay. So then what has happened next? What happened on June 15th?
You purchase another 300 toys at $1.50 with a freight of 75.
Yes, so 615. We purchase another 300 items at costing me $1.50 each, which, what's my total purchase price? $4.50 plus 75 gave me a total of $5.25. All right. So now I have to add up my total. So what's my total here?
400.
400 at what total cost?
$666.67.
Okay, and what is my average cost per item going to be now?
$1.66667.
Can someone, what was
Yes,
it? What, the 1.66667, you said?
Yeah, 46667.
Okay, perfect. Okay, and what has happened next?
Sold 250.
You sold 250. So 250 at 1.6666. I can't fit them all in there. So what is my total cost going to be?
416.67.
416.67. Oh my gosh, and I put this in the wrong box. Let me see if I can move this information down here. Okay, so 41667. So minus 250. How much remaining should I have?
And
All right, minus the 416.67. So how much should I have left?
166.67.
No, 166.67. Try that again. 250. You should have 250 even. Good. And of course, if you recalculate that, that should still give you the 1.6667. All right. So let's go ahead and totally up tally up our totals. So here I have a total of how many items did I sell?
450.
At what cost? What's my total cost that I sold?
$700.
700 even. All right. So let's go ahead and take a look here. Number 32. What is the total cost of your ending inventory?
250.
B, 250. And then lastly, what is your total cost of your cost of goods sold? So in this case, if I pull my answer, it is going to be for 700. D, 700. Excuse me. All right, good. All right, so that's a practice for you for perpetual inventory. We got to see a LIFO. we got to see a moving average. So you should be able to complete the same doing FIFO. All right. So here's my lower cost of market. So here's the chapter 6 that I was looking for. So here, use the following table down below. So some of you guys can get this right, but some of you guys can also get this wrong as well. So this is on the exam, so make sure you do this right. So here's my example. I have original cost of $4.75 each with a replacement cost of $4.05. And my selling price is $10.50 with a cost of disposal of $1.33, and my amount of profit is $3.55. So, number 1, what is my ceiling price? 9.17. Okay. What is my floor? 6 point what? Okay, I don't think it's 6. Because you have 55 cents, and you're trying to 5.62.
62. Yeah.
5.62. Okay. All right. So now that we have our 3 numbers, right? We have 9.17 and 5.62, and our replacement cost is 4.05. So what is going to be my market price, or my market price? It would be 5.62 because in this case, 5.62 is higher than 4.05. So that means because it's in the middle between 9.17 and 4.05, 5.62 is right in the middle. So again, now the question is, which one is lower? Is my market price lower, or my original cost lower? In this case, my original cost of $4.75 is in fact lower. So your answer is going to be C. Okay, so remember, when you reach the market, you're comparing 3 numbers. You're comparing your ceiling, your floor, and your replacement cost. All right, once you determine what the market is that between those 3 numbers, then you're going to compare your market to your original cost. All right, any questions right there? No questions?
No.
Okay. All right. So again, let's go ahead and dive right into the chapter 9. So let's see here. Use the following information to answer the next question, okay? So on January 1st, you establish a petty cash fund for $500, okay? By January 31st, you counted all of your receipts and you found that you bought a birthday cake for $19.99. You bought a pizza for $23.78. You bought office supplies for $6.02, and you bought postage stamps for $10.75 each. So the question here is, for what amount do you need to write a check for to replenish your petty cash fund?
60.54.
60.54. Good. So in this case, if we understand this, right, you have a box full of money. If money's been taken out and you're left with some receipts and more money, how do you put back the money? You write a check for the amount of receipts that you have and put it and replace it back into the cash box, so that now by February, right? You have a full cash register or a lockbox of $500. Okay, you're not gonna have $60.54 worth of receipts and whatever remaining amount of cash. You're replenishing it, so you're adding back the money that should have been there in the first place. Okay. So number 36, how do you establish a petty cash fund?
A.
Debit, petty, and the credit check.
Okay, good. You don't ever debit your checking and credit your petty cash, and you don't debit your petty cash and credit all your expenses, and you don't debit all of your expenses and credit your petty cash. That's a no-no. All right, even for replenishing. Okay, you never remove any amount in the petty cash fund unless you choose to close it out. Okay, so let me go and pull that up. All right, number 37. Okay, how do you replenish petty cash funds?
B.
Yes, and that we just took an example, we just saw an example right there, right? You're going to write a check for the total amount of receipts in the lockbox. Okay. All right. So, tomorrow we're gonna go over chapter 10 and 11. It's up to you. You know what? I'm gonna give you a choice because right now it is only 9 o'clock. Do you want to finish out the whole study guide and then tomorrow you do your independent study and then take your exam on Thursday, Friday, Saturday? It's up to you. I mean, I'm all for it. If not, I can let you go out now and then tomorrow we come back and finish up chapter 10 and 11.
We can do it now, I think so. I can.
Okay. Anybody else?
So we don't have classes on Thursday.
No, no class on Thursday. All you have to do is take the exam. Okay, but if you choose to finish the study guide out today, then Wednesday, no class either. You guys do your independent study.
Is this class materials in the Google?
Yes, everything's on the Google Classroom.
I say let's finish it today if everybody's agreed to it.
No, it's okay.
So that's 3. One more. Yes. Let's finish it out today, and then tomorrow, no class, independent study, and then Thursday is going to be your exam for Thursday, Friday, and Saturday. Okay, only 3 days. I'm giving myself the Sunday to grade your exams, and you should have it back on Monday. And then over the weekend, you should be expecting a lot of newer material on there, on the Google Classroom. Say that again, Elo.
Do we need to log in tomorrow?
Log in tomorrow. You just need to write on the home page or the stream page that you are checking in for class. Both days. Okay? You don't need to check in at 8 o'clock. Just check in within that day. Okay? Because, I'm expecting you guys to either independently study or, find some kind of method to prep for the exam.
So just log in the time tomorrow.
Yes, just type in there and clock in your time tomorrow.
How about
Yes.
on Thursday?
Yes. No, you don't need to go to class. I'm not going to be on.
No, log in on Thursday. Log in time.
Yes. Same thing. On Thursday, doesn't matter when, as long as you do it within that day. Because on Thursday, you are not required to take the exam at 8 o'clock. You can take the exam whenever you are ready and comfortable for. And you have 3 days to do it.
No, but we're gonna log in on Thursday with the time.
Yes. The time doesn't matter as long as you clock in within that day. Yeah.
I have question for exam because I work the night shift.
Uh
If
huh.
I bad first time, can I take second time other day or I have to do immediately?
No, you could take it. You have 3 days to take it. So
Okay,
if you take it on Thursday and you don't do well, you could take it on Friday and you don't do
okay.
well, then you could take it again on Saturday.
Thank you.
Yes, as long as you when you take your attempt, you have to go through all 50 questions. You can't stop in the middle. All right? And if you get logged out of the class out of the exam due to your internet or whatever reasons, that means when you do your second attempt, it starts all over.
Oh, okay. Thank
Yeah,
you.
so that's a downside. And yes. Okay.
Thanks.
So again, you have 3 days to take it. So you're not required to take it on that Thursday, but I would highly recommend you not to take it last minute. Don't take it on Saturday. And because if you don't like your score, you want to leave yourself room because again, all of these questions, when you retake your second attempt, they're all going to be the same. Okay?
It would take around 4 hours to take it.
Yes, and it should take you roughly 4 hours to take it. Yes, depending on how well you know the material. Because if you don't know the material, then you're gonna be struggling. But if you know this material like quick, you could do this exam in about an hour and a half. Yeah, if you know the material, you go boom boom boom. You're gonna go through everything pretty quickly. All right, but this exam should take on average roughly 3 hours to do. Okay, so if everyone is okay with continuing on, then let's go ahead and continue on. And I can answer all your questions about the exam afterwards, and then we can go ahead and call it the rest of the day, and then we'll resume on class on Monday. Okay, so number 38. So now we're moving into chapter 10. Chapter 10, we learned 3 sections, right? We learned about receivables, we learned about time value of money, and we also learned about bank reconciliation. So this is where we all tie in everything that deals with cash itself. Okay, so number 38. Under which method does the IRS use the write off for bad debt for tax purposes only?
See,
C, direct write-off method.
That's correct. Good. Okay, make sure you know the difference because remember, we don't learn the direct write-off. However, when we move into QuickBooks, I will show you the direct write-off. Okay? So make sure that you know that the direct write-off is only meant for tax accountants only and for tax purposes only. Okay? So, question number 39. Okay, a company estimates that $34,807 of its 500,000 accounts receivables are uncollectible, and there's currently a debit balance of $5,000 in the allowance for doubtful accounts. So the adjustment entry will be
39.
39,887.
39,887 is correct. So 39,887. So the answer is
B.
B. Good. So remember, we used the balance sheet method because we recognize accounts receivable. So that means whatever determination of what balances, if they're debit or credit, we have a debit, we're going to add the 5,000 to our estimate. Okay. Number 40. A company estimates that 34,887 dollars of its 500,000 total credit sales is to be uncollectible, and there is currently a credit balance of $5,000 in the allowance for doubtful accounts. The adjustment entry will be
29,887.
wrong.
Oh, shoot.
34,887.
Yes, so here the key word was total credit sales. I even bolded it right there. So on your exam, obviously it's not going to be bolded, but make sure that you're aware of your when you read it. Okay, don't look for this number and don't look for this number. Okay, read this number because it will stop you in your tracks. All right, so in this case, we're dealing with the income statement method. Income statement method, the allowance for doubtful accounts and accounts receivable don't even exist on there. So therefore, nothing is going to affect this amount right here. So if I'm getting rid of $34,887 worth of total credit sales, that is how much I am going to be writing off my books. Okay. So again, here's another one. A company estimates that $34,887 of accounts receivable is to be uncollectible, and now there's a credit balance of $5,000 in my allowance for doubtful accounts. So my adjustment entry will be
29.
this one is now 29. Yes, because now we're dealing with the balance sheet. We recognize the accounts receivable. That means we need to care about what is in the allowance for doubtful accounts because it's a contra account. If there's currently a credit balance already as is, right? That means our end goal is to be at $34,000. If we're already $5,000 in, then we need to subtract the number to get us to where we need to be at. So 29,887 is the correct answer. So again, testing you one more time. There is my company estimates at 34,887 of the 500,000 total credit sales is to be uncollectible, and there's a current debit balance of $5,000 in the allowance for doubtful accounts. How much is my adjustment entry going to be? 30 what?
39,887.
Wrong.
Wrong.
34.
Because of the total credit sales. Okay, this is the income statement. So again, the income statement, the accounts receivable, and the allowance for doubtful accounts don't exist on the income statement. So whatever the amount is that I'm writing off is going to be the amount that I am going to write off. Okay, so we don't care about the allowance for doubtful accounts because it doesn't exist on the income statement. Okay, so these, you guys, if you guys are struggling on this particular part, review it over and over again and get to be familiar with the wording of how I'm going to word this, because this is the exact wording. I'm going to give you a scenario. It's going to say a company estimates, exact wording, right? All you need to do is determine whether I use accounts receivable or total credit sales. Okay? All right, so use the following tables below to answer the next question. So again, this is a bank reconciliation. So here is an example of a bank statement. Down below is an example of your cash ledger, as well as your check register, as well as your deposits right below. Okay, so again, here's your little table here. So which side do you want to start on first?
I guess the bank side.
Okay, so first we're going to start off is, what is my ending balance in my bank account?
1,088.
1088 is in my bank right now. So 1088. All right. What do I need to add into my bank account?
Deposits.
You need to add your deposits. So let's go ahead and first determine how many deposits have I made so far. How many deposits did I make so far?
4? Five?
5. You
Five.
made 5, right? And let's go check out how much the bank cleared from us. They only cleared 4, right? So which
Yes.
one did not clear?
August, oh, wait, let's see. The 483?
4,
Yeah, one.
yeah, 483 did not clear. So in this case, I'm gonna write, what was it, August 30th, for 483. Okay. What is the next thing I have? So what do I need to subtract from my bank?
The outstanding checks?
Outstanding checks. So let's take a look at our check register. Okay. How many checks did I write?
8.
You wrote 8. Let's go ahead and determine which checks have cleared.
So,
We missed the 6, 3, 6, 3, 7.
Good. We missed 306 and we missed 307. So what values are those?
368, 314, and 54.
314 and 54. So again, I'm going to bring it down here. I have check number 306 for 314. And I have a check 307 for $54, bringing my grand total to be, you said, what was it, 368?
Yeah, but you got 314.11.
Oh, my bad, typo. There you go, 368. So what is my total adjusted ending balance in my bank account?
$1203?
1203. Okay. That doesn't mean we stop here. We gotta confirm if our checking matches our ending balance here. Okay. So first things first is, what is my ending balance in my cash ledger? What is my ending balance in my cash ledger?
1153?
1153.
1153. Okay. So again, when on the exam, it's going to be a little more easier to find. So 1153 is what I have in my cash register. So, what do I need to add to my cash register?
Interest?
Interest, okay? So let's go ahead and roll up and see what is my interest. Okay?
75.
75. What else do I need to add as well?
ACH?
your auto clearinghouse. So 125 and then 75 for interest. So ACH for 125 and interest for 75, right?
Yes.
So what is my total amount that I need to add here?
300. I'm sorry, 200.
Okay. So then what do I need to subtract out from my bank account?
Fees, NSF fee, and service fees.
Good. So let me scroll up and see what I got charged. So I got a charge for service and I got a charge for NSF. How much for each?
100 for service and NSF for 50.
Perfect. So I'm going to scroll down here and I'm going to subtract my service charge of 100 and I have my NSF for $50. So I need to subtract a total of 150. So then what is my new adjusted balance in my checking account?
1203.
1203. And they both match. So my answer is
1203.
1203C. Okay. So again, this one, okay, so the like I said, my tables are going to be a lot more easier to find things. I'm not going to test you on that many, checks or that many things, but this is a perfect example for you to practice doing this because that's all I'm going to test you on. It's just making sure that you have your deposits and your outstanding checks on your bank side and your ifs, which is your interest and your fees on the checking side. Okay, so good. Now we're diving into doing this real quick. Some simple interest. Okay, so you bought a bank bond for $200,000. Its annual simple rate is going to be $7.75%, and it can be redeemed in at any time. How much will it be? How much would the bank bond be worth in 10 years? Excuse me, I cannot read today. So, first thing is we're going to be asking is what particularly is it asking for? Is it asking you to find simple is it asking you to find interest, or is it asking you to find out what the future value is?
Future value.
Future value. So this is exactly what I need you to remember, okay? Or at least look for when you're calculating the simple interest. You need to read the question carefully. Is it asking you to solve for interest, or is it asking you to solve for the future value? So I will word it just like this. If I say how much interest will be collected in 10 years, then you know to solve for interest. In this case, I'm looking at how much the bank bond will be worth in 10 years. So in this case, I'm looking for future value. So with this, because it's a simple interest, I need to solve for my interest in order to solve for my future value. So in this case, what is my calculation going to be here?
The principal plus the interest.
That's future value.
So
But
principal 8 times time.
Perfect. That's how you get interest. So what is my interest for this bank bond?
155,000.
155,000. Okay. So then what does that make my future value become?
355,000.
Okay. So therefore, my answer is going to be
355,000.
C. Okay. So in this case, That's exactly what I'm going to do. I'm not going to test you on partial years. I'm going to give you straight up years. I'm going to make it simple and easy as possible, okay? I don't want you to have to figure out what 6 months is, right? I'm just going to give you a straight number, make it simple and easy, okay? So then here, a credit card company lets you borrow $500, okay, at an interest rate of 28.9%. All right, and it's compounded every month. How much interest will be collected at the end of 2 years? So this one you need more than a calculator. If you have Excel, then you're good to go for here. But let's go ahead and solve this. So what is my interest going to be at the end of 2 years? Okay, so if I were to copy this piece of information, okay, so my principal is $500. My rate is 28.9%. Okay, and my compounded is going to be 12, 12 times a year, right? Because it's every month. And I have it for 2 years. So what is going to be my future value? Because I need to solve future value in order to solve for interest. So what's my formula for my future value? Principal. Anybody?
Yeah, I can read it because my English.
That's
So
fine.
principal time,
Mm-hmm.
1 plus, we have to make a rate.
Yep.
Okay, what's my rate?
28.9%.
So 0.2890%. Okay. Divided by what?
Number
Number of times compounded. All right. Okay. Raised or up to the nth power. All right. And what's my formula here? It's going to be to the n, which is the number of times compounded,
times the years.
times time. Good. So what is my future value here? Okay, so I'll go ahead and just, oh, okay, I did something wrong with my formula. Okay, so I have to do it again. So 500 times 1 plus 0.289 divided by 12, parentheses, 12 times 2. Okay, so I get $885.15. So therefore, how much is my interest going to be?
So it's the future value minus the principal.
Correct.
385.15.
385.15. So let's take a look at my answers. Do I have a 385.15?
Yes. A.
Yes, you do. Okay. Now,
Confusing.
for this test, I will not test you on compounded interest. You're only going to see simple interest, okay? Just because I have to assume that not everybody has Excel, nor I also have to assume that, you don't have access to a graphic calculator, okay? So with that being said, I'm not going to be testing you on compound interest. I'm only testing you now because I need you to remember that compound interest exist, okay? And the fact that it's the most commonly used uh, type of interest that you see more common, right? You see it through credit cards, you see it through bank loans, you see it through home loans. You see it more common than you would see for a simple interest, okay? So I need you to know that it exists, all right? But I will not test you on it. All right, now we're moving on to chapter 11 territory. Yay. Okay, so question number 46. What fixed assets can never be depreciated?
Land.
Land.
Land, okay? So in this case, land can never be depreciated, okay? Buildings is part of your plant. Parking lots is part of your property. Street lamps or street lights are going to actually be part of your property as well. It's part of your it's the same thing as parking lots. Okay, so it's part of the land that you're being, not land, property, because you own the property. Therefore, if you decide to have street lights or anything like that, it's going to be considered depreciable. Okay, because the you can't depreciate the land itself, but whatever you add on top of the land can be depreciated. Okay. Number 47. If fixed assets are depreciated, then intangible assets are
Amortized.
amortized. Yes, amortized. Okay. So again, I will test you on that. They're not going to be burned, they're not going to be depleted, and they're not going to be wasted. Okay. So again, that was the same exact question on your quiz, except I asked it to you in a different way. All right, number 48. Okay, if a machine was put into service on January 19th, when do you actually start depreciating it?
February 1st.
February 1st, because it falls after the first 15 days. So therefore, 50% of the month, it's actually under 50% of the month. So in this case, it is going to be February 1st. Good. All right, number 49. Okay, gap determines which two components for depreciation. So this one, I'm very specific on the wording.
D.
D, A and C only. Only estimated useful life and salvage value. They do not determine partial years, okay? So good. So this one, I'm asking a particular question. All right. So question number 50. What are the three depreciation methods?
D.
D, all the above. Yes, we learned what double declining is. If I say you have accelerated, is that going to be considered a depreciation method?
No.
Declining.
Yes, accelerated and double declining are the same thing. So make sure that you know there is no difference between them. If I asked you for activity based, is that going to be considered a depreciation method?
Unit of production.
Yes, it's the same thing as units of production. So make sure I may ask you that question. I may be straightforward and give you double declining straight line in units of production. I may say activity based, accelerated, and straight line. Okay, just make sure you know those inner interchangeable terminology exist, okay? But in this case, good. So you recognize that these are all going to be depreciation methods, okay? Number 51, under the double declining method, at the end, book value must be equal to
Salvage value.
salvage value. Yes, right? It doesn't match your asset cost. Obviously, you're depreciating it. It's not going to hold its value anymore. It's not going to be holding its estimated useful life because it's under double declining. What happens? You can depreciate it twice as fast, so therefore it may not even last that long. And lastly, none of the above is obviously not right. So again, book value must always be equal to salvage value. And you cannot go below it. And if you do go below it, you need to adjust accordingly to reach. So then the salvage value is equal to book value. Okay. So here you go. This is a perfect example of what I'm going to be asking you on the exam. So here you go, using the following table to answer the next two questions. So here I will be giving you example for each type of depreciation. So here I only have two. So I can test you on straight line, double declining, and units of production. I will have all three on the exam. Okay, so here again, here we have an asset. It's a computer. All right. The depreciation method is straight line. So I'm pretty, I'll let you know what it is. The estimated useful life is 5 years, and it cost me $2,500. Salvage value is 0. Date that you placed into service was January 5th. So let's go ahead and depreciate this. So what's my depreciation basis? This is straight line.
2,500.
2,500 because the formula is 2,500 minus your salvage value, which salvage value is 0. All right. What's my depreciation rate?
$2,500.
Not 2,500.
Oh, I'm sorry. Hang on.
0.4.
1 over the estimated useful life. So in this case, it's 1 over 5. A fifth of the year is also known as, do you say 40 or 20%?
0.4.
No, it's not 0.4. This isn't double declining. This is straight line.
Yeah. 1/5 is 20%.
It's only 20%. Good. All right. So therefore, what is my depreciation expense going to be for the first year?
$500.
$500. And because we know this is straight line, and we are depreciating it as of January 5th, so therefore we're depreciating it for the whole year, assuming that it is done at the end of the year. So here, what is going to be, so the question is, you don't need to fill out the whole entire table because the question asks you, what is the depreciation expense for year 1 and 2?
So it's 500.
It is going to be 500. Okay. Now the question is, what is the book value for year 2? So therefore, you do need to solve for the rest of the table. So in this case, my accumulated depreciation for the first year is 500. What does that make my book value?
2,000.
2,000. Good. Now, again, what is the accumulated depreciation for the second year?
1,000.
1,000. So what does that make my book value be at the end of 2 years?
1,500.
1,500. So therefore, let's answer this question. What is the book value for year 2?
B.
B, 1,500. Okay. All right. Okay, so that's straight line. Straight line, again, asset minus salvage value is going to be your depreciation basis. Your rate is only 1 over the estimated useful life. Okay, just that number only. There's no times 2. There's no divided by the number of units produced. It's just 1 over its estimated life. Okay, and of course your depreciation expense is going to be basis times rate. Okay. All right, so use that review sheet because it has all the formulas right there. Okay.
It's already posted on the Google Classroom.
Yes, everything's on the Google Classroom. I'll go over that one more time before you guys go as well. Okay. Last question here, or last scenario here is going to be use the table below to answer the next 2 questions. So this time, I have an asset. It's a printer, and my depreciation method is going to be units of production. All right. Number of units that it can produce is 10,000 pages. All right. And I have an asset cost of $500. And my salvage value is 0 with the date that placed into service is going to be January 2nd. So in this case, since I'm depreciating it for the whole year, here is my units that it produced that year. So what is now going to be my depreciation basis?
C5.
It's still
2,500.
5. Where did you get 2,500?
Oh, sorry. Oh, the cost is right there. Sorry.
Yeah, no worries. It's 500. Good. Okay. What is going to be my per unit rate?
0.2.
0.2? No. So this is units of production. How do I solve for my per unit rate?
Is depreciation basis divided by units produced.
Correct. So what is 500 divided by 10,000?
0.05.
0.05. So that means it's going to cost me 5 cents per page I print. Okay. All right. So what's going to be my depreciation expense for the first year?
$125.
125. All right. Which makes my depreciation expense the same there. So what is my book value going to be?
We shall read it.
75.
375. Okay. So then solve for year 2 because I'm going to ask questions based on year 2 as well. So what is going to be my depreciation basis for year 2? What is going to be my depreciation basis? No. Your depreciation basis for units of production will still remain as
Just
your asset minus salvage value. So in this
it's gonna be
case,
500.
it'd still be 500, correct. And the per unit rate, since the basis didn't change, will also be 5 cents. Good. So this time, what's my depreciation expense going to be?
100.
It'd be 100. So remember, in this case, once you solve for 1, okay, your only thing that's changing is your depreciation expense because every year your depreciation, your amount that you produce that year is going to change, but your rate's going to stay the same and your depreciation basis should stay the same. Okay, so now I have 100. Or what's my total accumulated depreciation for year 2?
225.
225, bringing my book value to be
150.
150. Try again.
Oh, wait. No. Sorry.
275.
to 275. Good. All right. So now let's go ahead and answer the questions, okay? So question number 53 says, what is the depreciation expense for year one?
B.
B, 125. Okay. And then what is the book value for year two?
275.
275. Okay. So I will ask you exactly just like this. I will ask you particular questions asking you what is the depreciation expense for year one, year two? And then I'm going to ask you what is the book value for year one or year two? So just exactly like this, okay? So that you're expected to know on the exam. I will test you on all three methods. So I didn't add this in here, but yes, it's not very hard to do the next or the other depreciation. But if you like to go over it, I can go over it. But in this case, it's pretty straightforward. You have examples from the Google Classroom. You have the example from the PowerPoint. You have you have the chapter 11.2 exercise, and you also have the chapter 11 review exercise as well. So if you need another example, let me know now. Yes or no?
No, I don't think so.
Okay. All right. So Dan says no. Anybody else? Because we completed our study guide to its infinity. So that is it for today. All right. So I'm going to go over things that you need to know